Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, let's take a look again on the gold market. So we have interesting question what to do currently with this situation, because on the gold market our preliminary setup for Brent body sell is ready. So you can see market has shown nice upward action, thrust down, close above the 3x3, reaching major resistance level 1863 and weekly overbought. So this potentially two different directional patterns by the chart Napoli. First one is the Brent body sell, second is stretch, bearish stretch. The tricky moment stands with the overall sentiment on the market, because you know in this geopolitical situation the demand for safe havens have increased. You can see the jump in the gold that we discussed in the weekly report. Additionally, you could take a look at 10-year yields that has shown pretty nice bounce. And from a technical point of view, this is normal. There's absolutely no questions to this performance. Market has reached the oversold 2 times, forming double repo sell here on a lower time frame and shows downward action. That's great. But the problem is that this type of the performance, well, it's put the different background for current gold action. So this is mostly friendly for the upward action, rather than a downside reversal. But at the same time, maybe the first reaction now is over, and market now is turned to some few sessions period where everybody will start watching and waiting for some news how situation will develop. So sometimes definitely will need it for clarity. What will happen, how different countries in the region will react on this situation, and so on. From that standpoint, some short-term pullback is possible, as on the 10-year yield, gold market, and other markets as well. So from that standpoint, I wouldn't really ignore this potential setup for trading. Besides, here is it is possibly relatively to place relatively near standing stops orders and to minimize the potential risk. So what particular things we could keep an eye on? On the 4-hour time frame chart, this is the target of the potential Brent body if it was happen around 1830, and you can see that we have unfilled gap. So markets, as you know, trying and tending to close the gaps once they have been formed. On the financial market, it is a bit more markets more sensitive to gaps. On the commodities, they are not too sensitive, but still, especially on the lower time frames, it's usually aimed to close them, which is additional factor in favor of the Brent body right there. And the major question is where to take the position and how to take the position. Since the overall geopolitical background not quite friendly for downward action, we recommend to wait for clear bearish patterns before taking any position. Particularly speaking, for example, on the hourly chart, we could watch for some kind of the hand and shoulders, for instance. So when market starts dropping, shows the pullback here somewhere to the 1853, it will be possible to consider taking the short position for possible downward action closing the gap. Those of you who trade on the lower time frames, you could even keep an eye on smaller scale patterns, and actually everybody could, because gold market very often, in most cases I would say, right in the top, in the moment of the reversal, likes to form 222 sell patterns. So if we drop our time frame, for example, to the 15-minute chart or lower, and we'll take a look what will happen here. If market will start forming here some guidelines 222 sell, it might be used for taking the position, because that might be the reversal. And particularly speaking, why it also interesting is just because it significantly minimizes your risk, because you could place your stop right above daily overbought area. It will be very close. So that might be a really excellent trading stop. If even market will keep going higher, well, the risk is very small. So it's definitely the scenario that makes sense to consider. Additional to the bearish moments, we could say that here is take a look, we have the divergence. Well, divergence suggests taking out of these lows, which is actually also corresponds to the idea of the bread body trade. And this divergence makes sense just because it has been formed right at the fib level and daily overbought. So it's not just in some free space. That's actually what all our thoughts currently on the gold market. So be careful, but in general the overall setup looks well interesting for possible trading, and you just need to think about it and make your decision how you what's more suitable to you, the process of the position taking, what's more comfortable, particular for you, if you would like to take part in this potential trade. And let's keep watching what will happen.